It was a roller coaster ride for corporate earnings in 2015. Geopolitics, economics, and global pressures played a part in this up and down, back and forth phenomena. I spoke to several key market players who expressed guarded optimism and some pessimism for the year.
For 2016, the Malaysian corporate earnings will probably be quite lackluster. We're probably looking at something like in the mid-single digits.
It's been, 8 months since the imposition of GST. We haven't seen a recovery back to where we were, so it's a bit of a half-hearted recovery.
So companies will probably face declining sales. On top of that, importers will probably face margin pressures.
The state of health of the listed companies, particularly the ones that we invest in, things don't look too bad, but they're priced for a Titanic. So all these things might make me feel more confident that the index will have a better year, contrary to expectations.
From a technical perspective, perhaps we are not so negative. We are more neutral on that. But from a fundamental and valuation perspective, I think the Malaysian market is probably going to be lackluster as well. I think what will probably impact the Malaysian market is when the geopolitics impact the oil market. And if it does, it's actually a positive for the Malaysian market.
We still have a current account and trade surplus. In fact, the latter seems to be improving. So, I'm not that concerned. But as far as external or internal factors are concerned, I think external factors are affecting the stock market. So to see US rates going up and them falling at the same or maybe a higher rate in other parts of the world, particularly Europe, has got me really scratching my head as to which way Malaysia is going to go.
People are expecting 2 to 4 rate hikes next year for the federal for the US, and anything above and beyond that will probably be a negative impact to the markets.
My real worry is a serious correction in global asset prices and economic growth to basically adjust back down to the way the world is. Malaysia will not lead any global markets, I don't think. We will have to follow because we're relatively small. If that happens, I hope you've got plenty of gold. Internal political problems seem to be finding their relaxation of pressure through the exchange rate, which is, in my view, way below where it should be.
Politics, yes. The newspapers, around the world published a lot of articles on Malaysia with regards to what's happening, and that led to poorer investor sentiment, foreign investor sentiment into Malaysia for 2015. But as of today, the news flow has slowly died off. The sentiment will be probably more positive moving forward.
Well, it makes people think that what seemed to be an intractable problem, that this company, One Malaysia Development, which has built up so much debt, would ever go away. But in fact, if they successfully sell off their energy business, and they have a lot of assets which are, their book cost is significantly below what the market cost is. Suddenly, it's possible by the end of the year people will say One Malaysia Development, what was that? Yeah, I remember about that. So it could become, go into the rear view mirror.
For 2016, we expect CPO price to be stronger than 2015. And the reason is because we think the El Nino that's affecting the estates in 2015 will impact supply. So palm oil supply are expected to grow at a much lower rate in 2016. So that will move prices higher. 2016, we are looking at CPO price to average about 2,450 ringgit per tonne. Supply in 2016 for palm oil could potentially be flat, or it could fall by about 5 to 7%, depending on how bad the drought is based on the El Nino. We are projecting earnings for planters to be stronger in 2016 on the basis of higher CPO price. Okay, we like Genting Plantation in Malaysia, basically because of their young estates profile. So we think there's a lot of growth prospect for the group going into 2016 and beyond. I think we estimate that the cost of production could potentially go up by about 3 to 5%, but there's a half-year impact, so you see another potential increase going into 2017 as well, because the minimum wage only going to come in on 1st July 2016.
The property market outlook for 2016 is expected to be challenging. I think for most of the developers under our coverage, we are expecting at best flat to declining sales. The main issue here is margin of finance. People are not getting the right margin of finance as they used to get 2 to 3 years ago. The other factor is obviously a demand factor, which I think a lot of people have a little bit of a confidence issue with regards to Malaysia's economic direction. For 2016, we are still looking at very undervalued developers whom offer the right product segmentation, i.e. affordable market, because we expect this demand to be fairly resilient. One of our recommendations is actually Huayang. The other one that we quite like is obviously due to EcoWorld's sister companies listing EWI or EcoWorld International, and that is supposed to come on stream towards the end of first quarter 16. That should lend strength to the share price, largely due to the news flow. I would advise that investors, I think, wanting to look at property stocks, they would have to take more than a 12 to 18-month view on the sector. We are seeing unprecedented times where we are seeing very, very sharp drop in numbers, which we've not seen in the last 10 years. I'm actually personally concerned that the sector may see further deratings and valuations, especially if numbers cannot be sustained at a certain level.
That was a wrap-up market outlook of 2016. I'm Zunaira Saieed. Thank you for watching and goodbye.